Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is April the 5th, 2019. Strong hand, long-term thinking, unconfiscatable. Bitcoin is next Bitcoin. One Bitcoin equals one Bitcoin. Personal responsibility is new counterculture. Oh, I'm on fire. You better be valuing your wealth in Bitcoin. You better know that Bitcoin is the next Bitcoin because Jeet has returned to the show. And we've got two guys that have never been on the show before, but they're awesome dudes. They're out there on Twitter. I've linked to all of them below. So you better follow all these guys. David Bennett is also here. Phil Geiger is also here. And David has you've got a podcast, of course, and you'll promote it, and you can find it on his Twitter anyway. So check them all out. But we're going to start with the big news of the week. Now, of course, you're supposed to value your wealth in Bitcoin, but all you fiat freaks were going wild, like on April Fool's night or whatever night it was. And yeah, Bitcoin went from 4,000 to 5,000. There was $1,000 candle. Yeah, we'll see more of them in the future. We've seen them in the past, newbies. Get used to it. But people are like, why did it happen? Why did it happen? I usually don't care why it happened. It just happened, okay? But the thing that intrigued me is because I hear all this talk about over-the-counter, but if you want to buy a lot of Bitcoin, you got to do it OTC. You got to do it OTC. I have met all sorts of freaks that have said, I want to get in touch with an OTC person. I am an OTC person. I've never seen a trade consummated with OTC, okay? I've never. So then I hear, oh, there was three tremendous purchases on exchanges that boosted the price. And I'm like, oh, wait a second. Maybe some of these so-called wealthy people are just going to be like, I'm not dealing with OTC. It doesn't exist or sort of exists. I'm just going to be buying it on the exchanges now, which would be awesome. I would love if all the rich people in the world just started buying it on the exchanges so we could see, so the price could start spiking like mad. So, Jeet, what is going on here? There is a new tweet out there that says that the original theory of three large purchases isn't true. What's going on?
Yeah, so like you said, there was like that massive price move. I was up at night, just happened to be up and happened to see it live. So I was like just tweeting constantly, and it was just a fun time on Bitcoin Twitter. But it was a huge move, like you said. It was like 4,000 to 5,000. It was out of nowhere, no news really, nothing to drive it, and so everyone's been really confused on what could the drivers be. And there's been a lot of theories. So one theory is, like you said, there's 20,000 Bitcoin that were purchased, 7,000 in three exchanges. It's all done algorithmically. Another person said there was a big Russian consortium that knows that sanctions are going to come. They started buying. But the more interesting thing that came out was Cumberland.
You got muted there. You muted yourself. What happened? Oh, plug your mic back in, Jeet. Oh, dude. Oh, there you go. Wait. Uh-oh. Right when he was getting to the punchline.
I know, man.
Oh, man. I'm going to here. He talks about
my seat here.
Wait. Russian consortium? All these things. Pound that like button, people, for this. I'm on the edge of my seat. And Jeet is figuring it out still. What happened? Keep talking, Jeet. Dude. Jeet, hang on. Let's see. Jeet. All right. Well, Jeet figures out the sound, because he will figure out the sound. David, what are your thoughts on this?
Oh, on the candle. Yeah. I woke up, cranked up my computer because I missed the whole thing. So I see this massive green candle and I'm just like looking at it. My wife comes in. She's like, what's wrong? And I just point to the screen going, I don't know what this is, because I haven't seen one of these things in so long. The only news that I've got on it is, like the stuff that's in mainstream Bitcoin news. So like, Cointelegraph is saying something about a series of 13 orders that the Cumberland trading desk tracked, and they all exceeded 1,000 BTC. And what I had actually heard before all that was something about there was a lot of OTC buying, and then a whole bunch or some whales came along and decided to go ahead and market buy, not OTC, but market buy this stuff and just cranked up whatever it is that they had bought OTC before. I don't know if any of that's true because I'm not plugged into that system.
That's why we need Jeet to give us the answer. All right, Phil, how about you?
Yeah, so I think this week was a pretty clear sign that the honey badger is emerging from its long slumber to just slap the dollar in the face again. It was a small slap. I think this next bull market we're going to be seeing these types of moves pretty regularly. I tweeted something earlier today, but in 2013 we saw like $100 moves. Before that, we were seeing Bitcoin move $10 a day. Last bear bull market, it was thousands per day. This next one's going to be $10,000 moves per day. So this was just a little, I don't know. I think it was the honey badger just stretching and shaking the cobwebs off. But it's just a small sample of what we're going to see in the next couple of years, I think.
Oh, the future is bright. And now we're in the future with Jeet. Jeet, say something.
Guys, can you hear me?
Yes. Yes. You were saying. Continue with what you were saying.
Sorry, I don't know. You guys probably already covered like half of the big headline news, which was so Cumberland Mining, which is the one of the big OTC over the counter companies in Chicago, put out this tweet which was analyzing the exchange data that they saw, and it looks like the 7K BTC buys wasn't necessarily, there's no data backing that, but what they found is there was, within the span of an hour or two, there was a couple of 1,000 Bitcoin buy orders every second happening. And so when you see that much volume coming into an exchange, you see what ends up happening is there's only so much liquidity in each exchange, and it ends up just having price spikes. And also something that you mentioned earlier was like the reason, like you were talking about the secrecy of over the counter. So this is kind of interesting. Like the reason the price spiked is the reason why people generally don't like to buy on exchanges if you're purchasing in large volume. And what happens is called slippage. So if the person who started buying at 4K and ended buying at 5K, they had 20% slippage. So the first Bitcoin was bought at 4K, the last one was bought at 5K. So if you don't want to, suffer 20% declines, what you end up doing is going to an OTC desk and purchasing directly from them. And instead of charging you 20%, they'll charge you maybe 1% or whatever their spread is. I'm not familiar with the current rates, but and the other thing I'll say too is there are some of what you're talking about where everyone's an OTC trader and everything like that. Like that's kind of true, but what ends up happening is people know somebody who knows somebody who can do OTC, and so they start acting as agents and they try to, I think, either pick up a fee or could also just be scammers that are trying to find whales and target them. But I think the bigger thing is that OTC desks do exist, and the reason they exist is to avoid these big price declines and price spikes when people start dumping or people start purchasing all of a sudden. So yeah, this is the reason OTC exists, and it looks like somebody who's either naive or just decided to pump the price one day, just started buying.
Okay, so your theory is that it's the person that did this was just naive, maybe they didn't know about OTC desks. Or could it possibly be it's just too much of a pain in the butt to deal with these OTC desks?
It could be. So one of the things is anytime you deal with the OTC desks, they do run KYC on you and everything. Like they're like legitimate businesses, right? So this could be a guy who's maybe trying to avoid KYC, and he's willing to suffer 20% price slippage. Or it could be somebody who's naive, because we've seen that before with the Mt. Gox trustee last year. I mean, this guy, he's entrusted with tens of thousands of Bitcoins, and he's just an animal on every exchange, dumping Bitcoins every chance he can get, not realizing that the fact that he's dumping the Bitcoins is feeding into the price decline. So there are people who aren't familiar with trading, like not all, like especially newer people or people who are used to much more liquid markets where you can buy and sell, millions of dollars without a second thought. This market's not like that. So I think that there's a potential that it's just somebody who doesn't realize, is not familiar with the market structure here.
Well, I do hope that more and more people get fed up with the OTC and come to the exchanges and reveal what's going on behind the scenes there and start pumping the fiat price. I'd like to see more $1,000 candles. Again, it will come. It will come. And what you referred to, yeah, there are a lot of shady dudes that approach about OTC stuff. So I guess there's the legitimate OTC desk, and then there's like the majority of other people who just want percentages, and who knows what they want.
Hey, Adam, can I ask Jeet a question?
Yeah, sure. Please.
Yeah, Jeet, was conjecture. I had come into some conjecture that large OTC buys were being done before, and then somebody decided, one of the whales decided to pull the trigger and market buy, and by doing that, pumped up the price of what they had originally bought on the OTC. Is that possible?
Yeah. So, all right. So this is so I've been like, I'm not an OTC guy, right? But I've been talking. There's like some OTC people in Chicago that I've been talking to, and this is all conjecture on my part as well. But it's possible that somebody's like playing around with the price for sure, because what you can do, if you think about how, like if you guys have read Flash Boys by Michael Lewis, it's something that people do. It's like information matters. So if I know that somebody is making big purchases in the market before the rest of the market sees that, I'll make big purchases myself, drive up the price, and then when he makes his purchase, I can sell into his order, right? So the conjecture that you're making that this is somebody who's potentially making big purchases, maybe what they've done is they sell in the market, right? So how would you play this? So you have a lot of Bitcoin, you realize that you realize that somebody's going to start making big purchases, so you pump the price, and then when they have to purchase, they have to buy a larger amount. Now the problem is, if the price spikes up 20%, that's a different story. Somebody might decide to like hold off for a minute until it comes back down. So it's not really clear. It's not really clear that that's exactly what happened, but it's definitely possible that somebody is playing around with price.
Now, I want to add that no chart could have predicted this. I mean, this is, the people who are so-called traders out there, and traders like lose 90% of the time. This is something, this could happen again. This could happen on a larger scale. You don't know when something like this is going to happen. You can get totally burnt. So I'm just throwing that out as a public service announcement to all the people that you really can't predict things like this.
Agreed.
Yeah. Okay. Good. Well, anything else on this subject, anyone, before we move on to the ICO SEC news?
Yeah, I think just one thing. I totally agree with you. Like, if you're not a professional day trader, you're just going to be wrecked by these markets. So I always try to tell people to play a completely different game, right? And that's the long-term hodler game. Take the Satoshis off of the exchange forever and sit on them.
Yes, that sounds very familiar. Strong hand, people. Long-term thinking. Don't just again. If you leave your Satoshis on the exchange, come on, it's going to get hacked eventually. You're going to lose them. You'll cry. It'll be terrible. Okay, so moving on, because SEC ICOs. For all you traders out there that are stuck holding bags of ICOs, the SEC sort of said something about ICOs this week. It's still not exactly solid. What do you guys have to say about the SEC talking about ICOs? Phil.
Yeah, so I think they released some statements that don't really come as much of a surprise to me, at least. I think probably to the ICO issuers, but when you start off trying to raise money and you print a token, right, and then sell that token to people who are buying it in order to trade it or make money, like, that's pretty much a security. I think we'll probably see litigation over it for the next 3 to 5 years, but I don't know.
Oh, God, it's just going to keep, the SEC will drag it on. Everyone's going to drag this out. This is why I'm happy to be in Bitcoin. I don't have to worry about. Okay, let's see, David, your thoughts on the SEC and ICOs?
Well, from what I understand, this is a letter, basically a letter of no action from the SEC to answer a lawyer's letter from TKJ Jeet, some kind of like private jet company. They have 2 jets, and apparently they want to use their own secured, privatized, permissioned blockchain, quote, in blockchain in total air quotes, man, to be able to have their potential customers buy their token and then use it to, I don't know, jet around the world on one of their 2 jets. Now, the quotes that I'm seeing here is that there's like 2 stipulations here. I think it says that first, the tokens have to be non-transferable. So They'll supposedly, you'll never see them in a trading pair. You're not able to give them to somebody else. And the other condition apparently is that it had the company has to buy back the tokens that are unused from their customers at a discount, which means the customer loses money. So if I buy $10,000 worth of these things, use $5,000 of it, and then send the other $5,000 back to the company, because that's the only person apparently that the SEC will allow to, that I can transfer the tokens to, I actually take a haircut on those tokens. This to me is just, I don't know. I don't really know what this is, quite frankly.
Well, it was two different things. Like, they did the letter and then they had a statement also. So you're talking about the letter aspect of it.
Yeah, I am talking about the letter aspect of it, but there's the information that is contained in this particular letter is going to end up propagating through the system of ICOs insofar as it's, I don't know, the stipulation is really strong, and it's almost as if it's so strong that why use it? But I'm not sophisticated that way. That's sort of not where I dwell when I come to Bitcoin, because I can't say that I'm a Bitcoin maximalist only because I hold a bag of Doge. Okay. And I've held a bag of Doge ever since 2015. Right. And I'm too lazy to go sell it, but I just don't see the value here of people having their own token. I just don't. I mean, I'm like I said, not sophisticated. And I'm probably missing a much larger picture, and I'm probably embarrassing, the daylights out of myself, but I don't see it, man. I just don't.
All right. Now Jeet is going to clear all this up. But before he talks about the SEC, you just mentioned Doge. Jeet, can you talk about your Doge tweet real quick that you had recently?
Yeah. So this was kind of tongue in cheek, but kind of real as well.
Yeah.
So there's a developer report that's put out by Electric Capital, and they looked at all the development activity across all the coins, and it showed like developer activity on one axis, and then the value of the coin on the other axis. And what it showed is there's a couple different things. One of the things was like Bitcoin is the most valuable per developer. Ethereum has the most developers. There's some coins that have 0 developers, and one of them was Dogecoin. But what's interesting is this coin is worth like half a billion dollars. So it's kind of like, I feel it was just kind of a joke, but it's kind of true that Dogecoin's achieved its final form. Like, it's completely ossified. There's no further changes that are needed. You have a miner community, you have a user community, and people love the thing, and it just works. And what was funny is Josh Cincinnati, who's in the Zcash Foundation, he thought it was pretty funny, but he actually has made the point before, and so he linked to a talk where he talks about that's how he views the Zcash community moving as well. So it's just kind of an interesting point, because that's something that people talk about Bitcoin moving towards eventually, that the developer community and the ability for developers to introduce bad code or malicious code is there. And with Core, we have a solid process where there's a lot of review and things are screened, but there's still the opportunity. And once Bitcoin gets large enough, the value of messing with the code somehow is going to be enough that people will try to do it. So it's good to get ahead of that and talk about ossification and not having a ton of changes.
No, and it's really, seriously, investors also, they don't want to invest in something that's going to change. It's going to totally some of these centralized altcoins, they can change in so many different ways. And I think Andreas has also used that term ossification to describe perhaps the base layer of Bitcoin is almost there. But yeah, that is a positive for Dogecoin. It is the first. I wouldn't say it's a top tier altcoin, but it's probably a second tier altcoin. It's ossified. It's a serious thing. So who knows what will happen to those bags? But again, just because I'm saying the word Dogecoin, I'm only saying it to show you an example of ossification. It doesn't mean. Remember, just buy and hold Bitcoin. Okay, Jeet. Now explain the SEC. Your take on the whole SEC.
So I think David's got a much smarter take than I did, but it's kind of interesting because the SEC is in a weird position, and all these regulators are in weird positions where the risk is if they crack down too much, then the U.S. becomes unhospitable to like the new era of innovation that's happening in cryptocurrency, encryption, all these interesting things that people are trying and doing. The risk is that if they crack down too much, people get out of the country and try to do it somewhere else, right? And with because it's all internet based, you don't need to. You can be wherever you want. You could be in Puerto Rico or in another country if you wanted. But it looks like they've made a statement now. It's unclear how this actually impacts people, because it's once you're successful enough and you have enough people supporting you, the SEC is not going to crack down. Like they obviously didn't crack down on Ethereum, even though it was a security, the distribution was unfair at the beginning, and there's all these factors where normally you would see them cracking down, but it's so successful to have so many institutional supporters that people aren't cracking down. So I think ICOs and all this stuff is going to continue to be a gray area until like things get finally settled. But what I would say is, as an individual, if you're thinking about doing an ICO, like please think twice about it, because anecdotally, I've heard in Canada there was an ICO where they were using the funds to buy Lambos and things for themselves, and they're starting to crack down on them, and the prosecutors filed a lawsuit against them. So I think that's going to eventually happen. And if it doesn't happen from some government regulator, it's going to happen from individuals. And we're just so early in this space; it doesn't make sense to start taking those kinds of risks unnecessarily. So
yeah, dudes, don't do your own ICO. You don't want the United States government knocking on your door one day. I mean, that is again, I've been to events and you see everybody and their mother doing these things. No, it's not. It's definitely not worth the risk. They're not exactly clear on the direction this is going to go in. And if you live in the United States, you're under their jurisdiction. The SEC. Why even mess with them? Just hold your Bitcoin. It's why everybody wants to complicate matters. Everybody wants to. And you know what? I hope in the future there are all sorts of ICOs. I hope that the stock market is ICO'd and whatever. But I'm in no rush to mess in that space, and I don't recommend people definitely not starting their own ICOs. Okay, so we'll move on from this unless anyone else has anything else to say about that.
Just one thing to add about ICOs, like, it sounds like such a good idea if you're forming a team of people and trying to develop a cool project to raise money by just issuing a token. But what we've seen, over the last 5 years or whatever, is that you're now competing on two different arenas, right? You're competing against Bitcoin as a sort of currency, regardless of if you as a team want it to be a currency. And then on top of that, you have to deliver a cool product. So you've immediately like split your resources between managing a currency and managing whatever product you're trying to make. It just seems like it complicates things. Like just develop a cool product, sell it to people for Bitcoin, move on.
All right, good. Pound that like button, everybody. And remember, check out all the links below. All these guys are linked to below. I have a new show here every single day, so keep on coming back to disruptmeister.com. Follow me on Twitter at techbalt, TECHBALT. Okay, so are the institutions making a move here? There is a tweet out there by BitBit Crypto, and I sent it to all you guys, and it's linked to below. Bitcoin CME futures hitting a new volume record yesterday. Every contract represents 5 BTC, which means 108,000 Bitcoin or $544 million. Increasing volume in Bitcoin futures is pointing on rising institutional interest. With these numbers gradually growing, the chance of an ETF is growing as well. Okay, so that's a big thing there. CME numbers, their numbers are growing. Is this a sign that the institutions are getting in? Is this a sign that an ETF is on the way? What do you have to say about this, David?
I'm going to pass on this one. I want to hear what Jeet has to say first, man.
But David, didn't you talk about this on your show, man? I thought you were talking about this. Okay.
I talked about it, but again, in a more kind of a glancing blow kind of way. And I'm sure that our other two guests have a little bit more solid grounding in that. And I'd kind of like to.
Wait, we'll go to Phil, because Phil, you were the one who sent me that tweet. Phil sent me that tweet. So Phil first, then Jeet, then you.
Sure. Yeah, I think that the CME volume things are really interesting, just for a few reasons. Like, first of all, I think that one tweet was the only place that I saw this news, right? So when we hear about Bitcoin or futures, in particular, like the CBOE over the past few weeks, we hear all these negative arguments about it, like CBOE's closing down, and this is bad for Bitcoin. But slowly in the background and kind of quietly, you see the CME volumes continuing to just grow, and then we're hitting all-time high futures contracts. And this is great. This is a great thing for Bitcoin because it's a strictly scarce resource, and you have more money, more focus, and more energy on it. So pretty much in my mind, like any additional energy and time and focus spent on Bitcoin is in the long term going to be a really good thing for Bitcoin.
All right,
yeah.
Jeet.
Yeah, I totally agree with that whole idea that the more like financial institutions, the more ability that larger players have to trade in Bitcoin in a safe way and to get exposure to Bitcoin in a safe way is better for Bitcoin. What I don't understand fully about the futures is who exactly is doing the buying and selling. And I don't know if they want to reveal that, but the way that I think about it is, miners and exchanges are getting exposure to Bitcoin because they're mining or, trading. And then they need to sell that on. So they're either using the futures or they're selling to an OTC desk who's taking a big position, and they need to like hedge their risk. So what this allows is people like somebody like a big OTC desk can take on a ton of exposure and then hedge part of that exposure using the futures contract. And so it just allows for more movement of money. And so like people who don't want to take risk in Bitcoin don't have to, but they can also still get involved. So you want the miner to mine. You want more miners to mine. You want miners to mine who don't care about Bitcoin. They're just in it for the economic incentive, right? So that's pretty exciting. And then the other thing that's really cool about it is, I don't know if you guys saw the Bitwise report. I think you discussed it on a show last week.
Yeah.
Yeah. So the coolest thing in there was that they were saying like, look, there's a ton of fake volume, but the volume that is legitimate is about $300 million. And then there's an additional $100 million of futures volume. And then so you got $300 million of volume that's like legitimate and mostly with like regulated exchanges, except for Binance. And then you have an additional 100 million of futures contracts, which are like 100% locked down, fully monitored. And so you've got $400 million of volume, which is totally legitimate every single day. And so, in terms of like an ETF and everything else, like the more futures volume there is, the more legitimate the application for an ETF becomes.
Okay, good. I'm glad you tied it, explained why the ETF might be getting closer because of this. That was a good tie in there, because I was curious how that fit in. So David, do you have thoughts?
Yeah, I mean, I agree. I'm just, if there's, about when it comes to futures, there's a lot of times when I'm asking myself why, why futures in the first place? Because a lot of times, unless you're taking physical delivery of the commodity involved, then it's just nothing but gambling. And again, I don't get it, because if I want to go play with my money, I can go to Vegas and put my money into a brown paper bag and pour diesel on it, and then I can set it on fire and throw it out of a window. Now, with that said, Jeet's right. The exposure in the news you get, there's no such thing as bad press, right? Okay, so, and then with that said, there's a story comes to mind about something that happened a long time ago with a company that did take physical delivery of the commodity in question, and it made that company, and that company is Southwest Airlines. Are you familiar with the story?
Yeah.
Explain, elaborate.
Well, the way that it goes is that they had a guy in Southwest Airlines that was basically saying, we need to deal in jet fuel futures. And so played around. They got a little bit better at it. And then finally one day, the guy, I guess he's looking at charts and he's looking at what's going on in the oil industry. And he's like, we need to buy a major amount of jet fuel futures right now, because this crap is going to spike and it's going to put a whole bunch of other airlines out of business, because they're going to have to raise their rates so high to be able to cover the fuel cost that people are going to just want to go to us because we're not going to have that problem. They did it, and that's exactly what happened. Fuel prices rocketed, but the Southwest crew had already taken, or had basically had contracts that were filled with all this cheap jet fuel, and they were able to undercut every single airline in the industry for long enough that Southwest became a major carrier in the United States. Now, how does, I can't really make this fit with what can happen with Bitcoin futures and physical delivery of Bitcoin, but my suspicion is that something like that may occur, some kind of black swan event where somebody was smart about it and saw the writing on the wall and was able to take physical possession of Bitcoin due to futures contracts in a good play, and a huge company might actually be born out of that. Now, that kind of future trading, that's the only kind that actually makes sense to me, is the physical delivery. Cash settled stuff, I mean, it's just, for me, it's just gambling. But then again, I don't look at charts all day, and I don't, well, okay, I lie. I look at the BTC price chart all day because it's just one of the tabs, right? It's one of the tabs on my browser. But other than that, I don't make ascending and descending triangles. I don't try to trade on it because I don't want to lose my Bitcoin.
Dude, I agree with you about the gambling, except when it's the physical delivery. I'm on the same page as you with that stuff. As a regular dude, I wouldn't mess around with the future stuff. What the heck? Give me the real thing. I want to hold the real thing. I want the real Bitcoin. All right, Jeet, did you have something to say about that?
Two things to say. So one, there's this awesome Jameson Lopp tweet where he says, the mouse does, like, it, if what has this? Oh man, I'm gonna forget it now. It's the mouse doesn't know, or the mouse like if you don't know like why you're being, if you don't know why you're being offered something for free, you're kind of like a mouse that's going for the cheese in a mouse trap, right? And that's, I think, how most retail traders are when it comes to trading with leverage. So BitMEX offers an interesting service, but the idea that they're offering 100x leverage it's just an insane thing to offer retail traders because they're going to get wiped out. And trading with leverage, that's exactly kind of what happens. And I think everyone should have the right to do it, but I also think that it's important that people don't do it and they understand the risks of doing it, because people are offering you that because they want to take your Bitcoin. And understand that everyone's a scammer. That should be your mindset, that it's adversarial. Everyone you're dealing with is in some way trying to steal your Bitcoin. Whether it's like the guy who's saying, oh, I know an OTC guy, he wants to buy 5,000 Bitcoin. That guy's trying to figure out if you have 5,000 Bitcoin so he can simjack you and steal your Bitcoin. Like you should think through how people are going to try to take your Bitcoin, because they're going to try to. And then also just to comment on David's story on the Southwest thing. So I remember hearing that story a while back, I think in like college, and they were like explaining like this is why like finance is important. I didn't understand the whole context that that's how Southwest was able to build out their company while the rest of the industry floundered. But that's kind of interesting to hear. I think the parallel there is that the airline industry is completely profitless. So if you look over the last 50 years, like no one's made a profit except maybe Southwest during that 10-year period. But it's because anytime somebody adds more capacity, it reduces the profitability for everyone else. And people are adding capacity at odd times and everything else. So I think it's parallel to Bitcoin mining. So you can imagine that if you're a Bitcoin miner, you're in constant competition with people who have a lot more money than you do, people who are manufacturing their own chips. And so they have an advantage over you that are using newer technology, people who have access to hydro dams and different sources of low cost energy. And futures, I think, offers an opportunity for people like that to kind of hedge their risk in some way and try to eke out some level of profitability in an intense game. So it's a good thing.
Yeah, thanks for that, those clarifications. And Phil, thank you for notifying me of this story. And I'm proud to talk about stories that no one else is talking about. People should have heard about this. Phil, since you brought up, do you have any closing remarks on this subject matter?
Yeah, nothing really serious. I would say like Southwest Airlines did pretty well playing the jet fuel futures markets. If you're dealing with physically settled Bitcoin, you're playing with the rocket fuel future markets. So
to the moon,
yeah.
pound that like button, people.
So be careful. I mean, you can get burned, right? But yeah, it's
All right, that was very nice. All right, so let's move on to the next subject, which is actually a tweet by Jeet, and that rhymes. And what did he have to say here? We'll start out with you, Jeet. Coinbase/Binance may end up being the Google/Facebook of crypto in terms of acquiring everything that could potentially threaten their position on top. Dude, I thought about that. And, a lot of people like to rip on Coinbase and everything, but they are in a position where they could buy everybody else out, and they'll be left king of the heap there, top of the heap. Talk about this a little bit more while you were thinking about this.
Yeah, so I was I'm like going over Peter Thiel quotes for some research that I'm doing, and one of the things that's actually a thing that he talks about, that Google is a winner not because they're the first search engine, because there was like Alta Vista, Yahoo, and Ask Jeeves, but they're the last search engine. So they like did a 10x product over everyone else, and they're just a cash cow. They're just printing money right now with their search product. But one of the things he points out too is that people like Facebook and Facebook less so, but maybe Google more so, where they're just printing money. They're printing so much money that they don't have anywhere to spend it. So the best business, or like one format of really strong business growth, is when you have a reinvestment mode. So you make a ton of money and you reinvest it right back in the business. So that's like a franchisor. So if you're the guy who invented Domino's, all the money that you get, you can use to open new stores, for example, right? Well, for Google, they've invented the search engine. They can optimize it as much as they want, but it's not going to cost them hundreds of billions of dollars, which is the cash that they have on their balance sheet. So what do they do next? And so if you think about the valuation of Google, it's, a big chunk of it is their ability to continue to generate this cash flow 20 years down the line. And so what they're doing is guaranteeing that ability. So they're looking at stuff that could take over mindshare, and they're purchasing it. So Facebook's a good example. Facebook is super into data, right? And if you follow the podcast and you like read up on some of the people who were on their growth team, they track literally everything, and they have this in their DNA. They probably saw the growth that Instagram was having, and they know that with network effects, like somebody like that could take away their network effect. So they purchased Instagram. When they purchased it, people said, "You guys are crazy. You way overpaid. This is like a shitty app. It's used by teenagers." Sorry, I swore that. I didn't mean to do that. Sorry about that. But
Skip
now,
over it.
Skip over it.
Instagram is like the king of social media. Like none of the young kids actually use Facebook anymore because it's for old people. So they were able to overpay for Instagram, but because a winner is a winner in this space, you gotta purchase anything that's gonna take away your attention. And the parallel is Coinbase and Binance. Like Coinbase came out with they called it a couple different things: Coinbase Wallet, Toshi, and it's like a DApp wallet. It allows you to use decentralized apps on Ethereum. And it was funny because there's other wallet, Trust Wallet or Trust something, and I remember like going through and like comparing all these different wallets and seeing what the features were. They were like exact copies of each other. But Binance is sitting over there. They're a huge exchange. They don't have a wallet. So how do they do that? They can try to build their own wallet, or they can just buy this Trust Wallet, which they ended up doing. And then Coinbase started offering staking as a service. Sure enough, Binance started offering staking as a service. So they're all trying to copy each other's product features. If there's something that they can't build easily, they're going to go out and try to acquire it. And so I really do anticipate a lot more acquihires from these guys who are cash heavy on the balance sheet, and they want to they're playing to win. They want to sweep the table and take things off the table if they can.
So they want to be, they don't want to be first. They want to be the last. They want to be the survivors.
Exactly.
And so you can foresee, based upon the path that Google took, and I know this is a giant comparison, but you could see those two being the top of the heap at the end of the day, Binance and Coinbase.
Yeah, I mean, this is the way I look at it. Like Coinbase is big in the United. If you look at the average revenue or profit per user, people in the United States are far more profitable than people in any kind of less developed country, right? That's just a fact. And it's also 300 million people versus Canada, which has far less people, right? And versus any country in Europe, which has very small concentrations of people who aren't as digitally native and all that type of stuff, and they're less apt to do frontier crypto investing. So if you dominate the U.S. market, you have a cash cow, and they do. And if you look at what Coinbase and Gemini and the other exchanges are doing, they're encouraging more regulation, because what they want to do is raise the costs of starting an exchange and maintaining an exchange, so that people who are less well funded than them can't compete. And this is a common tactic. And so they're doing that. They're going to maintain the U.S. So they're here to stay. And then Binance is just so operationally efficient, and they just do they just give you what you want. If you go on Binance, people want more tokens. They're giving you more tokens. People want Lambo, so they're doing Lambo giveaways. People want staking, so they're giving you staking. They're trying to do everything they possibly can to meet everybody who's not in the U.S. and young people in the U.S. who are willing to take the risks of using their exchange. So I don't see who else is going to come out and beat them. I do see a place for country-specific exchanges. So if you're in Cambodia, like I imagine if somebody wants to start an exchange in Cambodia, they could dominate the market pretty quickly by addressing things, having language in Cambodia, having local events, things like that. There's opportunity there.
Just incredible points on your part. The popular theme on crypto Twitter is, delete Coinbase. Like Coinbase has met its end. And I have repeatedly said on this, no, I mean, they're big and they're going to survive and they could win. And you're reminding us how important the U.S. market is. I think a lot of people, I mean, it's awesome that crypto is all over the world, but and people have always asked me, where is it the most popular? Where is this? And I say in the U.S. Let
me just follow that up. Like, I'm one of those delete Coinbase people, partly because like they deleted my account and it was for no reason. I literally didn't like use it at all. It was like when I was first starting, but they flagged me as like a suspicious person for no reason. Like I'm like, I'll give you my like passport, like whatever you want. Just like give me access to buy and sell. And their support people to this day haven't responded. So I'm not sure, that's just my experience. I know other people have had similar experiences, but and it's encouraged them to, a lot of people have had similar experiences as me, and they've like gone into doing things like Monero and stuff like that. Like the guy who invented Cake Wallet, which is the Monero wallet, he has the same story where all of a sudden you find out one day Coinbase has deleted your account and just canceled you. You got no choice. So, there definitely should be more competition, but it's just a very difficult field to play in, right?
All right.
So do delete Coinbase if you can.
Yeah, well, but the point is like we all might, and I'm no fan either. But in the end of the day, they've got an advantage here, and you might not like that they're doing all sorts of horrible coins on there, or quote unquote horrible. But that's what the people want. That's what the 80%ers want. And, anyway, you got Phil. Your thoughts on this at all?
Yeah, I have a lot of thoughts on this one. I would say first of all, Coinbase is taking like a similar strategy to a lot of other like crypto companies that we're seeing. So they're doubling, tripling, quadrupling down on adding a bunch of these crypto assets. I think at the same time, they're kind of missing the innovation behind like how they became a company in the first place, and that's Bitcoin. So what we're seeing kind of behind the scenes, or with a couple different companies, such as Fidelity or Square, is we have these more traditional finance companies that are starting to add Bitcoin functionality. And I think like because of the amount of users Fidelity and Square have compared to Coinbase, like Coinbase is going to be obsolete in another few years. And we've already seen a lot of very, very large companies get hit pretty hard if they start treating Bitcoin as a second-class citizen. I mean, if you look at what happened with Bitmain, right? Like they were on top of the world in 2017. They doubled, tripled, quadrupled down on all these shit coins. And then now we're seeing them really, really struggling right now. I mean, they're going to be around for a few more years, but the industry is kind of moving on.
Well, but the thing is that Coinbase can just buy up a company that does something that they need. I mean, I think that's one of the points too.
I don't think they're going to be buying Square or Fidelity anytime soon.
So that's all right.
Yeah, Phil's got a really good point, because if you think about it, like if a lot of people have their 401ks in Fidelity, so if you're like you work with a company and you've got a 401k, you can imagine if Fidelity adds the option to just purchase Bitcoin, like through your tax advantage account. You could save on taxes and purchase Bitcoin, and it'd be open to like however, I think 50% of US households have stocks. So like it's like a whole other market that potentially opens up there.
Yeah, I mean, we're in this like complete bubble being in the Bitcoin or crypto industry. And when you take a step back and look at everything, like it's something like certainly less than 1% of the global population owns any cryptocurrencies. And then those of us who do own Bitcoin, I don't think any of us can say that we have our entire life savings in Bitcoin, right? That would be crazy. So like, if this thing is, if this thing's gonna like really take off, it means that we're measuring everything in Bitcoin, and everyone around us is using BTC daily, spending and holding or whatever, saving in it. So we're so unbelievably early that, from my perspective, the big up and coming markets are just trying to figure out how we get more adoption. So yeah, I see products like the Cash App and Fidelity Digital Assets and Lolly even like just earning Bitcoin passively throughout normal purchases. These are the types of things that I think are going to drive the next really big adoption wave.
Nice lolly shout out. I'm sure they appreciate. They've been on the show before. David, you've probably got a lot to say now about everything that was just said.
Yeah, the Coinbase. Yeah, it was my first on ramp. I think it was like, because I got into this whole thing September of 2015, and that was the only game in town, man. I mean, short of getting real weird, at the time I was like, look, man, I just want to buy $250 of this to figure out how it works. And now that, you're waist deep in the rabbit hole, I look at all the things that Coinbase has done, and especially since this last thing, hiring the digital terrorists, I just keep looking at how many times, Brian has really messed up and it hasn't hurt Coinbase. And I agree with the delete Coinbase movement, but I also am a realist, man. I mean, it's probably not going to hurt them because they already have in place a mergers and acquisition team. If they haven't said publicly, then they've got it privately. Nobody gets that big and just hangs around on the fence without going full blown, figuring out how to do M&A. And I think that they're just going to grow like a behemoth, but thankfully, we do have things like Square and Fidelity that's going to balance that, the BS power that Coinbase is spewing out. Because, and they'll continue to make mistakes. I mean, they've already lost their, I can't remember what her name is. She was one that was trying to deal with the fallout from the digital terrorists to hire, and she just jumped ship and she bailed. So, but even with all the pain and suffering that Coinbase has gone through over the years, I don't see him getting any smaller. So I think it would be dangerous for us to go around thinking that Coinbase is not dangerous to the ecosystem. I think they are a real danger to the ecosystem, and that's why I don't use them anymore. I use Square. If I'm going to buy Bitcoin, I can just buy it through Square. And, but I think Fidelity is going to have they have old school M&A people. And so they're in the same position, and it'll be, I think the direction is not going to be shown by where Coinbase goes. I think the direction is going to be shown by where Square goes, what Fidelity does, and what these other people do, because when you start stacking that side of the scale, all of a sudden, the more you stack that side of the scale, Coinbase gets a little lighter in the loafers, And so it'll be interesting to see what direction these other companies take. I've already been really impressed. I'm not giving Jack a pass on, because of some of the stuff that's been pulled on Twitter. There's a lot of people that have gotten deleted. I have never listened to them because I don't like their content, and I have the choice not to listen to the content. Having somebody taken away from me, I don't think Jack's making the good decision there, but Jack's made a really good decision about Bitcoin, and he's made a really good decision about how Square is functioning. And I'd like to actually have the people from Fidelity be a little bit more public, like Jack is, about what it is what's their mindset, because I don't hear a lot about that except what you get off of CNBC, and I don't listen to that anymore.
Fidelity has been leaking some stuff out slowly. I mean, they've created some pages. I understand what you're saying, and I'm glad you don't blindly follow Jack. And who knows why he's in this Bitcoin thing? He's not the savior. No one's the savior of Bitcoin. I like your approach to that. Definitely good, because you can't forget what he's done on Twitter, and he kind of plays dumb on some of the stuff that goes on Twitter. And maybe he doesn't know what's going. I don't know. I'm not too worried.
Yeah,
about it.
And let me just jump in there on the Twitter thing. Like, I think it's important to point out that it always starts with undesirable people, right? Nobody's going to defend the people that they're kind of kicking out. But then it moves on to other stuff, and you never know like the type of stuff they're pulling, because in addition to just blatantly kicking people off the platform, they're also playing around with the algorithms. And it's kind of this is like what we like about Bitcoin, that it's socially scalable. Like, there's nobody making decisions. It's like it is what you see is what you get. It is what it is. It's very, very clear, and nobody can change things around in the background. With Twitter, they're constantly manipulating the algorithms and who gets highlighted, who shows up in the moments. Some people get shadow banned. and they've also, it's not just undesirables in the U.S. There's also they're susceptible to changing stuff from stuff from other countries. So there's like very specific websites that they've banned, which they shouldn't have, which you're not allowed to tweet about. If you put it in a tweet, it doesn't go out, right? And it's more than just the few undesirable people that get covered in the news. They're also like impacting people in other countries as well. So I don't think it's crazy to point out that that's a lot of power, and that they should maybe be a little bit clearer about it, about how they're who they're banning and everything else. So totally agree with your points.
All right, let's move on to Boltz. Boltz. Yeah, what's up with this, David? What's up with this Boltz thing?
It looks like a front end GUI to submarine swaps. That's what it appears to be to me. So what does that mean? Well, submarine swaps being able to leverage both the Bitcoin main chain and the Lightning Network to get in and out of each chain relatively painlessly. So that I can get BTC into my Lightning channel, and I can get BTC out of my Lightning channel back onto the main chain. And I'm not even going to touch on the technical aspects of that, because pre-image, somebody says pre-image to me and I just go, So I'm looking at the Boltz mainnet. Now this is an alpha. Okay. So this is not even beta. This is all alpha stuff. And it looks like it looks like they're playing with two cryptocurrencies, which is Bitcoin and Litecoin. And from what I can see, I can send Bitcoin from the Lightning Network to Bitcoin main chain, or I can reverse that and send Bitcoin to the Bitcoin main chain, Bitcoin to Lightning. And I can switch. The interface is pretty slick. I mean, I got to say, the interface is pretty slick. I can change that to where I can send Litecoin on the Lightning Network to the Litecoin main chain. And then there's one, I'm trying to figure, I'm playing with it now to get to the, what is it? Hold on. Yeah, hold on. Okay. Well, nope, that didn't do it either.
We got someone who he really got into the story. He tried it out. Now again, it's an alpha. People, be careful with this stuff, please.
Yeah, it is really careful. What's the funniest part about this entire front page is that at the very bottom, in like 8-point font, is #reckless.
No, you had a very good non-technical explanation of what this thing is. It actually clarified it for me some too, because I was a little confused. What is this darn thing anyway? Phil, did you have thoughts on this?
Yeah, I actually was able to give it a try just before hopping on the show here, and it's pretty cool. Like, it's what I really like about it is we're just building out all of this infrastructure in different ways so that in the future we can abstract away all this complexity and just send Bitcoin transactions. And it doesn't matter if it's on chain or off chain. Like the user, as an end user, we're not going to know the difference. It's just going to show up, successfully to wherever we want to send it instantly. So, I look at all of these products being released, and especially with Lightning, like it's impossible to keep up with everything. Like you have Boltz, you have submarine swap, there's splicing, which is essentially like, I think the same thing, like atomic multipath AMP, atomic multipathways. So all these different features and functionalities are coming out. They're super exciting. And like at this point in time, using Lightning Network, like it's a little bit technical, it's a little bit tricky, but the amount of progress that we've seen in like a year is absurd.
Agreed.
Like try pointing out any other technology like that has evolved so quickly in so little time. Like, this thing it's unstoppable. And if you're not on Lightning Network right now, like what are you doing? Like every time I see somebody complaining about like slow or expensive transactions, I'm like, you're working with a modem and the rest of the community has moved on to like DSL lines, right? Like stop. You're working with dial-up. Like move on, guys. Get on Lightning.
Well, that was a good way of putting it. And again, there are a lot of fudsters that just say, "Oh, Lightning it's useless, it's pointless, it's already broken." This is the truth here. What these people are saying. David, you're about to say something.
Do what?
Were you about to say something, David? I thought I heard your voice.
No, there. For whatever reason, my keyboard decided to go like not work for me. So what I was going to do was that there was like on the thing there was a way that you can get BTC to like on Lightning to like LTC on Lightning, and there was one combination. Because the combinations are BTC main chain, BTC Lightning, LTC main chain, LTC Lightning. And there's one combination where the warning, at the bottom, it says coming soon, which I thought was funny, but it's also about alpha. But to Phil's point about modem versus DSL, I remember, getting on the internet and having to type in full blown URLs. There was no auto paste. There was no browser going and trying to figure out where it is that you're trying to go and just auto populate your URL line. No. And these things were monsters, man. It was just such a pain in the butt. And then like even getting, a picture of somebody who had taken like I used to search for guitar chords all the time. You like sheets and sheets of guitar chords. But man, that was back even before you had browsers. Okay, that I was using what was, I don't know if you guys have ever remembered this thing, but it was called Gopher. And it was one of the earliest ways that you could search what was the internet back then. And this is before Netscape, right? Ancient freaking history, man. And it was just such a pain. And guess what? It was so painful that I did it again and again and again and again because everything that I was getting out of the internet was so useful that the pain point didn't bother me. And I didn't even really know it was that much of a pain until I'm looking back on it now. So this whole, we've got to have 10 terabyte blocks and whatnot. I'm like, God, the trade-off that you're looking at in the future is just, it's immense. And what I've always, from the time that I didn't know anything about this tech all the way until now, I still hold to the same thing. The smaller you can be, the less encumbered that you are, the faster you can travel are all good things. And that everything else can come out of that, because this is like sort of if you think of it from a design science perspective, design being like, how do we design anything? And it doesn't matter what it is, UX, permaculture, ecologies, it doesn't matter. If you're restricted, what tends to happen is the designer ends up being much more elegant and creative and come up with ideas that are just slick as snot because they do have these restrictions. They can't go past X. They can't go past Y. And when they get these restrictions, they start thinking in completely different ways. Whereas it's harder for a designer, like let's say a permaculture designer who goes out and designs tree systems for like an orchard farm or something like that. And if somebody says, look, man, I have 640 acres, have at it. And then the designer can actually sit there and be so stunned with the immensity of what they can do that they don't do anything. And the stuff that they are actually able to do is done poorly. Whereas the restriction set really lets people fly. Wow. That's all I got to say about that.
I like that. The restrictions, get people's creative sides of flowing. I like that a lot. Jeet, your thoughts on going back to the Boltz?
Well, the point about the design space is a really powerful point. And yeah, I mean, I totally agree with that. I think that if you look at somebody who they get classical training in painting or something, and then they decide to experiment, they're much better than somebody who has no training at all, right? Because they have a completely open design. They don't know where to start. They don't know what the restrictions are. So that's just a beautiful point. And then on the Boltz, all I'll say is, it's kind of interesting because I think that this also uses the same like P2SH scripts that Abra uses in their smart contracts.
Yep.
So it's just kind of interesting that here's like the one feature that Bitcoin allows in addition to sending and not sending is these multi-signature contracts. And you can see all the insane ways that it's being used. So one is Abra's version. They're creating synthetic stock indexes and all this crazy stuff, all settled in Bitcoin. on the other angle, you've got people using Lightning on there and creating Lightning, and then on another layer, you've got people creating the ways that you can use Lightning easier than being a technical person and having to type everything by hand in a terminal. So I don't know. I'm just a fan. I don't fully understand the multi-signature contracts yet, but I've got a Bitcoin node. It's a Lightning node as well, and yeah, I'm just a fan. I can't wait to see how this progresses.
Wow. All right. Good. Well, we've reached that end of the show, but it's time for everybody to do their conclusionary remarks or just bring up a story that wasn't brought up that I left out. You know, there was a lot going on this week, so we'll start. David, what do you have to say? Anything that you wanted to bring up that wasn't brought up? Any thoughts on stuff people have brought up during the show? The floor is yours.
Buy Bitcoin. Not investment advice, people.
Oh, I like the simplicity of that one. I like that. All right, Phil.
Yeah, I've just been saying there's been a lot of talk this week about like different cryptocurrencies and stuff like that. And what I've been telling people is like Bitcoin's innovation wasn't that it gave everybody the ability to print their own currency. Bitcoin's innovation was that it gave everybody the ability to reject printed currency. So that's sort of my statement of the week.
Interesting.
I like it.
I like those final thoughts right there. Think about it, people. All right, Jeet, you got the final word. We're glad the microphone situation fixed itself. Thank God. We needed you, man. All right, take it away.
So I think the biggest point for me with Bitcoin that I always constantly try to remind people of is that things are slowly but surely becoming inevitable. So, you know, I think like this time, like 2 years ago or a year ago, there was like the whole Bitcoin Cash thing, and it felt like everything was going to fall apart, but it didn't, because there was a strong group of people who just rejected the poor ideas and the malevolent influence of some of these big companies. You know, there's all these people talking about how Ethereum was going to take over everything, but people hodled and they rejected the poor ideas that people had, which were focused on enriching themselves versus creating strong money and safe money that couldn't be influenced by other people. So at some point, it's going to become inevitable. It's slowly reaching there. And all you need to do is just slowly, you know, invest in Bitcoin, whatever you feel comfortable with, but recognize that when it's competing against all these other currencies, everyone is going to have a nice press release. Everyone's going to be able to have some flashy tool or something else, but not everybody's going to have the dedicated community that Bitcoin has. Not everybody's coin has like the strong track record of withstanding all these different types of attack from extremely well-funded attackers like Bitmain. And yeah, not everyone's coin actually is trust minimized like Bitcoin is, in terms of, you know, the hard cap on 21 million Bitcoin, in terms of the inability for people to put in malicious code and all these other factors. So I would just reiterate what everyone else is saying, like just buy Bitcoin and hodl.
Stack sats.
Yeah, man, we got some hardcore Bitcoin people on here today. I like that. Maybe I coordinated it that way. Who knows? I'll take credit for it. All right, thank you very much, guest. It was a rocking show. And remember, we do This Week in Bitcoin every Friday. Who knows what time it's going to be on, because I never know where I'm going to be and what I got to do. But hey, just Friday, you can be sure there's going to be a This Week in Bitcoin show here. The guests are awesome, top of the line dudes. Follow all of them. They are linked to below. I do a new show here every day. We'll be back on Saturday night for the Beyond Bitcoin show. But for now, I am Adam Meister, the Bitcoin Meister, Disrupt Meister. Remember to subscribe to this channel, like this video, share this video, pound that like button, bang that bell button. Shabbat Shalom. I will see you guys tomorrow night. Bye-bye. See ya. Bye.